what I'll do, since a lot of you have options questions, is I will go and I will answer a bunch of those questions. I'll do a video for you today, and I'll send it out. So if I don't answer your options question here, just log in at drboyceprime.com, put your question in there, and I will answer that, and I'll send you guys that video to take a look. Let's see. I have 100 shares of SoundHound. Good for you. And remember, don't get obsessed with one stock. With stock market investing, it's not like getting married. Like I married my wife. I probably could have married somebody else. I had a lot of money, so I assumed someone would have married me. But once I got married, I focused on my wife. That's what I was obsessed with. That's who I wanted. And and that's love. But with stock, you should not fall in I don't believe you should fall in love with a politician, and you shouldn't fall in love with a stock. Politicians don't love you back. They want your vote. They'll use you. Stock, if you get caught up with one stock, you're not investing properly. You're gambling. Um, Diversification is the one of the most fundamental, most critical aspects of investing. Never ever get to the point where you're like, okay, I bought 80 shares of this one company. You're not done. You need 20. And if you can't get 20, get a mutual fund. A mutual fund will give you exposure to 100. You understand? You got to diversify. You got to diversify. You got to you got to diversify. Why is that important? Well, whenever I hear somebody say, I put my money in and I lost 80% of my money, I know exactly how that happened. When Clinton Portis, the NFL star who had the highest contract in NFL history, lost $10 million with his investment advisor, and he was sitting outside his office with a gun because he was thinking about going in there and killing him. I knew what happened. Somebody didn't diversify. Somebody didn't diversify. There is no way that a person could have created a healthy portfolio for this man. It went broke. Not possible. Not possible. What probably happened is they put money in Cousin Rerun's bowling alley and Uncle JoJo's liquor store and all these other goofy investments that we do. When I say goofy, I'm not saying that they're always bad. I'm saying that they have a lot of elements that are indicative of really difficult investing scenarios that can emerge from that. Liquidity is one of many variables that will be a problem. And what do I mean by that? If I put $300,000 into Uncle JoJo's liquor store, I may not be able to get that $300,000 out. Uncle JoJo may not be able to go to, like, if I say, look, hey, Uncle JoJo, I invested 300,000. I want to pull my money out now, with interest or with some ROI based on the valuation of the business. How are you going to do that? How are you going to do that? You don't know. Well, number one, you don't know what the business is worth. So you don't even know if your 300,000 really made you, grew you a capital gain or not. Number two, what if Uncle JoJo says, look, I don't have $300,000. The liquor store makes, $5,000 a week. So I don't know how to pay you, right? So you can't get your money out. So I'm not saying don't invest in family business. I'm saying it has to be done very carefully. And it has to be done in the context of a very broad, diversified portfolio. And you got to think about things like that when you make investments. So just keep that in mind. You got to diversify, spread your money out. Let's see here. When selling, that's the only time I'll even give you anything that even sounds like investing advice. I don't give investing advice on this platform. I want to make that clear. But if I was to give anything that even came close to sound like investment advice, it would be basic stuff like that. Spread your money out, spread your money out, spread your money out. All right. I hope I got that point across. When selling options okay, so that's an option selling question. Log in at drboyceprime.com. Leave that question for me, and I definitely will answer that for you. Dr. Boyce says, Chet, what are your thoughts on total market mutual funds, fund investments like SWTSX? Total market mutual funds. Okay, SWTFSC. Sorry, SX. Oh, I'm sorry, I said it wrong. Okay, let me see here. SWTSX. SpringWorks. Okay. SpringWorks is a clinical stage, but so that's not a mutual fund though. Chet, that's a SWTSX is a pharmaceutical company. It's gone up. It I would probably look at this and wonder, like right now it's been going down though. The last month it's gone down 10%. Year to date, it's done pretty well. It's gone up 100% in the last year. that would lead me to be concerned about whether or not it's gonna pull back. Um, I mean, I don't see any reason why a person wouldn't put it in their portfolio. I think it's a matter of just knowing what it is. So pharmaceutical companies kind of have a lot of risk that the stock can just jump because of the results of a clinical trial. So you really have to diversify to protect yourself against that risk. But if you like the company and you like the prospects, why not? Let's see here. Okay, thoughts on SPG. SPG. Would I invest? What would I think about SPG? Simon Property Group. I like it already because I like the idea of getting into real estate. Um, okay. It is a self-administered and self-managed real estate investment trust and engaged in the ownership, development, management, shopping, dining, entertainment, mixed use destinations. Okay. Modest risk. Analysts are so-so on the stock. Uh, let me see here. The dividend yield is 5.3%. So if you like dividends, this is a stock to invest in. Um, with a REIT, you're not really going to get a lot of capital gains, but you will get that consistent income. So if you want to think of it like a savings account that pays you 5.3%, that might be the way to kind of look at it. Okay. Good morning, Dr. Boyce. If you're not using stock options, can you still make money in the stock market? Yes, Carol, you can. You can buy stock and then just sell some of it when the market's really strong, and then use that money whenever you want to. Or you can also buy dividend paying stocks, but it takes a lot. It takes a pretty massive capital base for you to be able to generate an income that's really going to make a dent in your life. It's kind of hard to get $1 million worth of stock just so you can make $50,000 a year. With options, you can make 50,000 a year much easier. So that's one thing. I mean, you don't need options, but options can be beneficial. All right.